Warren Buffett, one of the best investors of all times, does it yet again. A particular stock in the Berkshire Hathaway portfolio is crushing the market year to date. It's actually up 32%, whereas the market is down, was it around 6% or so at the time of making this video. So let's talk about that particular company. It's one that did recently report earnings. It's one name that you've probably heard of before, but you'd never thought of, well, it as a good investment. And that's Verisign. So let's talk about that in this video. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/CouchInvestor. Thank you very much. And special thanks to FinChat as well. Special offer this week only. You can get 25% off instead of 15 if you use my link down in the description and in the pinned comment. More on them in just a bit. All right, so Verisign, as you can see, year to date, the stock is actually up 33% after Friday's action. They reported earnings, stock went up 8%. Now they provide domain name registry services and internet infrastructure that enables internet navigation for various recognized domain names worldwide, .com, .net, .name as well, etc., etc. A company that, well, I've heard about before, never really studied the whole business. Now, if we zoom out and look at the total performance, if we look at the past 20 years, for example, the stock is up over 8,000%. Now, right now, it has a market cap of $25.68 billion, a trailing 12 months PE of 30.9 times, and a forward one of 28.5 times. Now, this is probably, let's call it, the bearish part of this video, and that's the fact that this is not a cheap stock. This is a stock that is going to or expected to grow 2.9% revenue in the next 2 years, and EPS a bit faster than that, 6.7%. So yes, you're paying a premium here, but if you look at the margin of that business, gross margin 87.8%, EBITDA margin 70.2%, free cash flow margin of 57.5%. So yes, you're paying a premium. Yes, it is probably expensive. It's not growing that fast, but it's an extremely high quality business. Now, if we want to look at some company specific metrics, of course, we can do that here on FinChat, a stock research platform, one that I've been using for quite a long time. And what's special about it is that you can look at company specific metrics, segments and KPIs in this case. And the example I want to use here for this company is, of course, domain name registrations and then the year-over-year growth or the declines. Now, as you can see, since the December quarter of 2019, it has grown at a compound annual growth rate of just 1.28%. And yes, it did peak here, probably coming out of the pandemic. But more recently, we can look and we can see that it has actually started to rebound a little bit. From the lows here of the September quarter of 2024, we have seen call it a little recovery in the year-over-year growth rates, or in this case, the declines. Now, last quarter, yes, the last quarter, it did grow quarter over quarter. Now, if we look at the new domain registration, we can see that the bottom was here in the December quarter of 2023. And since then, it has grown a little bit. Not much, but a little bit. More specifically, in the last 2 quarters, we've seen actually year-over-year growth rates. Now, of course, it's easy comps, right? You look at the 5%, 5.6% year-over-year growth. That's, well, because of a super weak quarter here, December 2023. Same explanation for the quarter that we've just had, 6.3% growth year-over-year. Yeah, okay, but that's on top of a declining quarter, same quarter last year. Now, since we're talking about Warren Buffett, of course, I have to give you the example of Apple here as well. If you want to look at iPhone revenue, Mac revenue, wearables, iPad, or services, you can do that here as well. You can look at the growth rate, which segment is growing faster than the other, how much of a percent of the overall revenue is each segment. You can do all of that on FinChat. So of course, if you want to try it out, link is down in the description and in the pinned comment. New users will get 2 weeks of FinChat Pro for free. And if you really like it, you'll get 25% off this week special offer if you use my link. Now, touching back on Verisign, which is just over 1% of the Berkshire Hathaway portfolio. So it is in the top 12 of the portfolio, which is quite something because, well, they hold quite a lot of positions. Yes, it's only 1%, but that 1% is worth over $2.7 billion. Now, the company itself, as I've said, revenue growth, not incredible, right? It's a solid growth over the last 10 years. We can see that it has grown revenue at a compound annual growth rate of 4.6%, free cash flow 3.8% during that same period. Now, what is impressive is that one, gross profit margins did increase from 81.8% to now 87.8%, whereas free cash flow margin is flat to down a little bit, although we did see a nice rebound since 2023. We went from 54.1% to now 57.5% for fiscal 2025. And this is also a company that has been buying back shares since 2018. Shares outstanding have declined by 21.61%. Last quarter specifically, revenue increased 4.7% year over year. Operating income was up 4.7% as well. We have operating cash flow of $291 million, free cash flow of $286 million, and earnings per share of $2.10. As for guidance was actually raised a little bit. So first up, domain-based growth from negative 0.7% to positive 0.9%. That's a big increase from the prior guidance. Revenue is now expected to be $1.635 billion to $1.65 billion. That's up from the $1.615 to $1.635 billion. Operating income did also increase a little bit, and then all the rest here remained unchanged. Now moving forward, of course, the year-over-year comparisons are still going to be quite easy, right? If we look at the June quarter of 2024, that was a quarter where they've seen new domain name actually decline 9.8%. So I do expect to see next quarter another nice year-over-year increase, and even the quarter after that, because, well, they do have 4 consecutive quarters of quite easy comps. And then afterwards, of course, it becomes a little bit more difficult, but it does seem like they could make their way back up to around 100, over 180, maybe closer to their peak here of 2022, where there were around 185 million domain named registrations. Now, touching back on the negative aspects of it right now is that one, well, it is expensive. It has run up quite a lot, as you can clearly see right here. And right now we are also overbought by quite a lot. After that run up on Friday, the stock was up 8% or so. So yes, it's a great company. Very solid financials, great margins, but I would say that, well, it is expensive. I think there are much better deals out there, but if you hold this, I see no reason why you should start selling such a company, right? It's still performing very well, very profitable. It's also now paying a dividend. You're not only getting buybacks, but you're now also getting a dividend. And since this is a pretty profitable business, I expect them to continue to pay a dividend each and every quarter, and maybe they might even increase it year after year. So all in all, that's about it. What do you think about Verisign? Do you own it? Was it on your watch list? Let me know down in the comment section below. To check out FinChat as well to get 25% off. Link is down in the description, and I'll see you all in the next one. Bye bye.